for financing in terms of the down payment options. So it's gonna be so fun to talk about. At the beginning, I said, down payment, what are we gonna talk about down payment? There's nothing to talk about down payment. But then I really sit down and I think about it. It's everything related to down payment. Even the 2008 crisis related to the down payment. I was like, well, this is something fun to talk about. I never talk about down payment in one section itself. But today I'm gonna talk about it because Anna was suggesting the topic, so I go with it. And at the beginning I didn't know what to say, but now I think I know what to say. I will, let's do some definition, So what is down payment? Somebody read it for me. I want the Zoom people to talk to me. Who on Zoom volunteer to read the definition of down payment for me? Volunteer, please. Otherwise I'm gonna volunteer, right? Anyone? Anang, are you there? Can you read? No? No one? No one want to read? Okay, we're gonna have somebody here. Cal, read for me the first one.
Absolutely.
What is down payment?
A down payment is a percentage of your home purchase price that you pay upfront.
Awesome, thank you. So we all know what a down payment is, right? You buy $1 million home, and if you said you have 20% down, it's $200,000. Your own money put into the purchase, right? Dylan, can you read me the second definition of down payment?
Lenders look at the down payment amount as borrowers/buyers' investment in the home.
What do you think about that statement? Like the buyer putting something, right?
Yeah,
It's collateral.
collateral,
Yeah, otherwise, if the borrower doesn't put in any down payment, then the lender have to come in with 100%, and I don't think the lender like that,
Too
right?
much liability.
Yeah, risky, right? Alex, can you read me the last one of the down payment definition?
Homeowners look at the down payment as their equity.
Yeah, that's their money, right? So that's simple, that's down payment. We don't need to talk more about down payment. But let's go to the next one. Why do we need a down payment? Okay, I'm gonna read it. Less risk to the lender. Why? Because we're gonna talk about that what happened in 2008. I had my real estate license in 2003. And at that time, I don't need to have loan license to practice as a loan agent. So I was acting as a real estate agent and loan agent at the same time when I just had my license. And I remember so clearly that in 2003, 2004, 2005, there are loan programs that insane. To me now it's insane because they don't require down payments. Basically zero down payment, right? And there are programs called NINA, meaning no income, no asset. That means they don't care about your income and they don't care about your asset. They still give you the loan. Yeah, NINA. I remember that name so well. And because of NINA and because of no down payment, we had 2008 Great Recession, or we can call depression. What happened? People who have no income, then no down payment, they can get in a loan to buy a home. What do you think? Is it dangerous? Is it so risky? Because they not qualify for a mortgage. How can they make the payment? When we do loan calculation, we do debt to income ratio, we do all that to make sure our borrower, they can afford the mortgage payment. That's the whole point. And back then we have no income, no asset loan program. Meaning, I don't care if you qualify, if you're able to pay, I'll still lend you the money. And the down payment, you don't even need to have the down payment. So what happened? Pretty soon, people cannot pay their own mortgage. right? And a lot of them, they don't even have any down payment, so why do you have to keep the home? Okay, I don't have anything in the home, and the market go down a little bit. If someone buy a home at $500,000, and their mortgage, they borrow a 500,000 loan, what happened when the home value go down to 480? The mortgage still 500, and the mortgage go down to 450. The mortgage still what? 500,000, and then people start thinking, I'm not gonna keep this home because my loan is bigger than my home value. I'm gonna let it foreclose. Not gonna pay my mortgage. I'm gonna stay in the house until they kick me out. That's what happened in 2008, 2009, 10, 11, 12. That's why there was so many foreclosure, so many short sale. What is short sale? Anybody familiar with short sale? Yes. But Alex, can you explain a little bit what short sale means?
Well, before the short sale, came in the picture, is that, of course, all the loans, that you were saying, there were too many loans that were generated. Actually, here's the history. I mean, let me add something to what you just said. During the 2007 and 8, 9, 6, 7, 8, 9, about 2 years, people are applying for a loan, a mortgage, right, to purchase. And they're buying 3 homes at the same time. Okay? They will submit it to 3 lenders, and they find 3 homes, and they take 3 homes with no down payment. And these are negative amortization, by the way. And it will reset or it will mature in 2 years. So they started with 1% interest rate. Just imagine 1% interest rate. You can pay that mortgage because if they buy 3, they rent the other 2, right? And they rent it higher than the mortgage. So they keep the difference. But 2 years later, they cannot make the mortgage anymore. The tenant moves out. Then they're responsible for the 3 mortgages.
Awesome.
Alright.
You bring in another point that's really awesome.
That's ridiculous, and that's for 2 years. Can you imagine 2 years of getting all those bad loans, and then it resets after 2 years? That's a wave or an ocean of bad loans. That's why we have problems.
Yeah, so what happened was the lenders at that point, they really creating all kinds of loan programs that really bad, and that hit really hard to the economy of the US. And that's why at that point in 2008, 9, 10, there were so many homes listed for sale, and the price is a really good price. But no one have the money to buy anymore. And the home is like so many on the market. And that really destroyed the real estate industry. The people who invest in mortgage, they lend us money, they lost so much money, right? Because of no down payment, because of terrible loans, right? So down payment, if someone come in with 0 down payment, the risk is really high because they can walk away anytime. The lender lose everything. That's why lender require down payment. They require down payment for a reason. Yeah, you want to buy a house, you have to have something in it. I don't want to just give you all the money. I think we are so lucky. We are living in America. We have a good system about real estate, mortgage and stuff. We leverage the lender's money to make our own profits. If you own a home for more than 10 years, you make $1 million by using some lender's money. And that's why I never complain about the interest rate. Honestly, when people get the rate at 3%, 4%, they were so lucky. And people still shopping around for something less. I don't believe it. But anyway, I never care about the interest rate. When I buy a property, I just buy it because I know I make money out of it if I keep it long enough. And every home we bought, we keep it long. And we keep it long, we make so much money. So basically, in America, when you purchase a home with a little bit of down payment, you live in there 10 years, you, after 10 years you sell it, you make so much money, so you feel like, oh my God, I live in that house for free for 10 years, and now I bring out with a big lump of money. It's just for me, profit. Living in a house for free, even though you see yourself paying mortgage monthly with interest, but that's nothing. It is nothing. But so many people still consider, oh, I have to pay this, I have to pay that, but they don't see what happened at the end, the future value of the home. Of course, if somebody sells a house 2 years after they buy it, or 1 year after, they might not make money, but for sure after 7 years, for sure, or 5 years, okay? So what happened in 2008, we all experienced that. That's why the mortgage industry and the real estate industry, people learned the lesson. That's why after that, they changed all the guidelines. They require all down payment, even for the no-doc loans back then, we require 30% down payment, 25% down payment. We need people to have reserve money. Even the no-docs, they don't look at your income, but they look into the money you have, because it's important. When you have 30% down payment in your home, you don't want to let go of your home when something happens, right? Because even the market go down 20%, you still want to keep your home, right? So after 2008, we have all kinds of new guidelines, and it's really strict. At that time, after 2008, when you submit a bank statement, lender not just look at your bank statement, they verify your bank statement with your bank. And when you submit your tax return, they verify your tax return with the IRS. Because before 2008, people make all kind of fake document when they submit the loan. But after 2008, the mortgage industry, real estate industry, they learned their lesson. They really careful, okay? So that's why nowadays, if people who don't do loan for 10 years and now they go back and do loan, they say, why you ask for so many things? In the past, I don't have to provide anything and I get a loan. Hello. That's why it happened 2008. And now it's different. And someone come to my office and say, I'm in the mortgage industry 20 years, I processed loan in 20 years ago. Can I work for you? I said, no, thank you. Because you know nothing about the new industry. I want a new face, because they learn the new stuff. Because people just go back to what they do in the past. It doesn't apply to what now. So that's why we have to learn every day. When you work in real estate, this is one thing about real estate. You gotta learn. Every week, every month. If you don't learn, you're behind. Because this industry changing every single day, and it changes really quickly. If you don't change, you won't stay up to date, and you won't be able to do well as other people who learn. That's why that train us to be a person who keep learning. This is awesome. So you need the mind that you can learn. That's why you need to do meditation.
That's why I do it.
Yeah, you should do it, yeah. Okay, so the down payment is important, right? But we talk about why it's so important, right? 20%, Jose, read me that one.
20% down payment proves the seller and lender that the buyer is financially ready for a home purchase.
Awesome. That's why when we make an offer, like if you take your client out, seeing home, right? Make sure your client has the pre-approval letter from the loan agent, from our loan department. And one more thing, you have to have the proof of down payment. And normally we have it. When you collect the document from your client, you have everything in your hand. And the most important thing you want to look at is your bank statement, because the bank statement showing the proof of down payment. And when you send an offer to the seller, you gotta send them the first page of the bank statement showing the current balance of the buyer's down payment. You have to prove to the seller, if you say in the pre-approval letter they have 20% down payment, you have to show they have 20% down payment in their bank account. You don't submit the whole complete bank statement to the seller, but you submit the whole complete bank statement to us, the mortgage department. But you have to show the seller the first page, right? Is that correct, Alex? Yeah.
Correct. Yeah.
So if you say, okay, my client wanna buy this home for $1 million with 20% down payment, so the bank statement, the first page should show they have 200,000 or more, right? And lender always require down payment. If you know your client have a down payment, then you take them out, show home. If they have no down payment, don't even go there because that's the requirement. Lender required, right? If you ask them, oh, but actually we have some awesome program that you don't even need the down payment, but now we have it, but before we don't. But we also have to find out if they qualify for the down payment assistance, right? But that's later we talk about it. But we have to make sure our client have the down payment before we take them out to see home, okay? More down payment, less monthly mortgage payment. Is it obvious? Because your loan amount is smaller. When you borrow a smaller loan amount, your monthly payment is smaller. But when you borrow a larger loan amount, your monthly payment is larger. For example, if you have 200,000 down payment, your loan is 800,000. And compared to someone who have 400,000 down payment with a 600,000 loan amount, which one paid more? The one with the 800,000 loan amount would pay more. Doesn't matter what interest rate they both get, right? So more down payment, less monthly payment. That's actually a good scenario to go with all buyers, right? Because they want monthly payment, low monthly payment. When the buyer go out and buy a home, all they care is how much I pay a month. Okay? So what else when we have more down payment? Lender, when they see you have more down payment, they give you lower interest rate. Is that better? Because they like borrower would have more money because that's less risk to the lender. So they encourage people to do more down payment by giving them a better interest rate. That's really nice, right? So when your client asks you, should I put down more money for the down payment? Of course, if you want to, because you're gonna have lower monthly payment and have lower interest rate, and it's easier to get you qualified. So that's the advantage of the low down payment. Okay. There are so many ways to save money, but which one is the way you want? It's really, we're all different. This one you can talk to your client about all this 1, 2, 3, 4, 5 different way of creating your down payment. So the first one is the automated saving plan, and I have the link there for you to see. Let's go to the link. It's fun. You have the link on so we can go over it a little bit. Have you heard of the compound interest? This is really cool. So even if you don't even put the money in your bank account, so that means when you save money just in your piggy bank, you have 0 interest rate. If you put $20 in a piggy bank every day, let's see how much you're gonna get. Let's go to here. But if you wanna save for down payment, you could put more. Some people, they make cash money and they just have so much cash and they tend to spend so much. If those people, they understand the concept of compound interest, and if they put that into the piggy bank like $100, $200 a day, they wouldn't believe how much they have after 5 years or 10 years. You put in there $20 per day, okay, for 0 interest for 5 years. This is for 0 interest. If you if you have extra $20 every day and you put in your this calculator, you did it. So 36,000 after 5 years, 36,500 after 5 years. That's no interest. If you put in a bank account that pay 2% interest, calculate it. It's 38,000. So, and how about somebody say, because I make cash money every day and I have extra cash, $200 a day, they put 200 there to see how much. 200 only. Let's see how much after 5 years. $200 a day. And I bet there are so many people, especially the Asian community, they do, even the waiter, waitress job, or you do something that you earn tips. If you can put $200 a day in your piggy bank or your bank with only 2% interest, After 5 years, you almost have 400,000. This is one way to save up for down payment, everybody. If you don't have 200, put $100, or even $50. Put $50 to see how much. Almost 100,000. $50 a day. You will say, how do I get $50? If you want it, you have to do it that way. Okay, let's go to the slide again. Go back to the slide. There is, because normally I think women, we tend to go shopping, buying stuff that we don't even use. And $20, no, normally more than $20, right? If instead of buying stuff that you don't even wear or use, put it in your piggy bank and see how much you might, okay. And so I think that's, you saving money. I think another way of saving, automatic saving is if you can put your money in your checking account, and then every month you put 500 to your saving account and just save it there every month, 500 or $1,000, whatever amount you put, but you make it into a habit that every beginning of the month I will put $1,000 into my saving account. See how much you're gonna earn after 5 years? A lot of money. Okay. The second way of saving is hustle or freelance work, means side job, extra income. Nowadays people can go sign up for a Uber drive, especially guy. You can do that for like 1 hour, 2 hours a day, and all that money, save it up. Do not use it. You save it up, 2 hour Uber drive. Every day go home, put it in your piggy bank, and then at the end of the week, bring it into your bank. Put in your saving account. You see how much you make or save after 5 years. If you think of buying a home, you can save up that way. You can show this to your client, because a lot of people, they say, I don't have money, my income right now just barely help me to go buy. I say, yeah, then if you want to buy a house next 5 years, buy an extra job, Uber or something. There's so many, or Amazon. Now there's so many things for them to do, okay? And people can also, if your client have 401k, you can advise them to use the 401k for their down payment. Gift fund. Gift fund is, okay, gift fund, we seen so many people use gift fund, and it's really awesome. Even me, when I bought our first home, we use gift fund. What is gift funds? Normally, first time home buyer don't have saving money. Period. Because we don't like saving, we like spending, right? So we don't have money for down payment. And then the moment we said we want to buy a home, we have no down payment. So normally we go to our family, ask to borrow money, right? And normally family will help us to buy first home, and they will lend us the down payment. But in our lenders' eyes, we don't want lender to see this is the money you borrow from your family, but you have to tell lender this is the gift from my family, because lender don't want you to see you to have another debt, because that means you have to pay monthly payment to whoever you borrow the money from. But anyway, gift fund is only allowed for owner-occupied property, meaning you buy a home, you live in it, then you can use the gift fund. But you buy a home to invest, to rent it, there is no gift fund allowed. Okay, you have to remember this. No gift fund allowed for rental property or investment property. So, I remember our first home, we bought it when we just married, and our home purchase price at that time is $500,000. We don't even have $50,000 for the down payment. Hey, we just married, we just out of college, we don't have that saving. So we basically asked our family to give us the 10% down payment as gift, and then we borrowed 2 loans. So first loan is 80% of the home is $400,000. The second loan is $50,000 from lender. So we borrowed 2 loans, first and second. In that case, we have our 10% down with 10% from the second loan. We have 20% down payment to the first lender eyes. So that means we don't have to pay mortgage insurance. If we have 10% down payment and we didn't borrow the second loan, then we will have to pay mortgage insurance, because we have to borrow 90% of the loan on the first one. So gift fund is one way to use for down payment. Why do we give you gift fund? Why don't we just ask them, the family give us the money and we deposit into bank account and then we buy at our home? Why? Anyone? Why don't we just, don't tell them to just gift fund. Hey, give me money, mom and dad, I will put it in my bank account and I will buy my house. Can we do that?
No.
Why? Can you tell me?
IRS.
Yeah, go ahead.
No, no, you.
Okay, go ahead.
No, sir.
Because lender will ask for sort of fund.
Sort of, okay, the source of fund, okay. If, whenever we submit a loan, we have to submit two-month bank statement. And if anything that deposit in the bank statement, lender will ask where the money come from, okay? And if there is a deposit, for example, if daddy give you 50,000 check, you deposit that check into your bank account, lender will ask, and then you say, that my dad give me 50,000 for down payment. Lender will say, can I have your dad's bank statement proving that this money coming from him? Normally, donor don't wanna give bank statement. They willing to give you the money, but they're not willing to give you their bank statement. So so when you meet your client the first time, you talk to them about down payment. That's the first thing you talk about. I always talk about down payment in my first interview. I'll ask, how much do you think you're gonna buy? They know. I think I'm buying 1.2 or $1.3 million home. And the next question, how much do you think you have for the down payment? They say, I have 20% for the down payment. And your third question is, where is that 20% down payment right now?
Under the bed.
Under the bed, right? Or I will ask my parents. And they will, lots of people, they know about money issues, so they say, what should I do? But if they don't know what to ask, you say, oh, you're gonna get money from your parents or your sister or your brother. Okay, that's wonderful, but you need to remember, do not get the money now and do not deposit the check to your bank account now. Do not do anything. Do not move money from your parents or from your donor to your account. Because normally when they come to you, they want to go buy home right away. And if they go buy home right away and the bank statement showing the deposit, then we might have to ask the donors for bank statement, and that creates problems. So you told them, okay, good, you're gonna get gift fund from your family, that's awesome, but do not move money from their account to your account under any circumstance. Do not deposit check or do not do anything. Wait until we got the home, wait until we in contract, wait until 5 or 7 days before you get your home key. I will let you know, and at that point, your donors will wire their money from their own account to the title company. And that way, let me finish this one side, thank you. That's way lender won't ask for the bank statement of the donor. Yes.
So what if they already did?
Oh, that's a good question. They did that all the time, by the way. Okay, so there's different way. If they already did, and if their donors willing to give the bank statement, that's awesome. And if the
They
bank
have
statement,
to, right?
yeah, have to. And if the bank statement show that, for example, they already wired 50,000 to the borrower or the buyer's bank account, and the donor say, I'm gonna give you my bank statement, and the bank statement show they have lots of money, and in there a long time ago, it's not just deposited, then it's okay, right? If the bank statement show they just deposit 51,000 in cash, and then the next day they transfer that 50,000 to your buyer, you know what you do? You said, I don't want to see this. Oh, I never seen this. Okay? So what you do, you have to wait. You either wait until, because
They have
you have to turn in 2 bank statements that show no deposit. So it takes time. Or you said, do you have another bank account that I can see that doesn't show any deposit? And then you have to transfer that money back to the donor so that the donor can be your donor again, but later on they wire the money, not right now. But you have to hide that bank statement. The bank statement that's showing money going in and going out, because lender want, if they see that, you're done, right? Because sometimes you only have one donor, and then if you show the lender the bank statement, and then the donor gives you the bank statement seeing the cash coming in. Cash is not allowed to use, by the way. No cash allowed to use for down payment. If they deposit 51,000 cash into the bank account of the donor, and if you show that to the lender, you're done. Lender not gonna lend you any money because lender cannot trace the cash because they're afraid of money laundering or something. So as a good agent, you only have to look at their bank account and see where the money really come from. And the outstanding processor, you have to read everything in the bank account, okay? So your job is to read through the paper too. Don't rely on the mortgage, because if you rely on them, it's a week later or a few days later, they find out, and then you look bad, right? So your job in the first interview, the first section when you meet your client is about money. Where's your money? Where's the down payment? Give money, then you have to have one section about give money. You have to explain to them how to transfer money, or no transfer money, or no deposit. Money will go to title at the end of the process, 5 or 7 days before you get your home key. That's it. So down payment is becoming the most important subject when you meet your client the first time, because that can ruin the whole entire deal. Okay? Okay. So that's give. We talk about give. Anything you want to add, T, or anyone experience? Yes, go ahead.
So if you don't want to provide a paper trail for the gift, you can do it at closing. So at closing, just provide a gift letter, and then the lender will not require for the bank statement at closing.
Yeah, that's why, because there is no deposit. You see? Then
Gift letter?
because the gift letter, because at the end, at that point, they won't deposit or transfer money to the client. They will go all the way to the title, right?
Mhm.
So yeah, so that's it. Just keep in mind, no, if somebody gives somebody a gift, and we have to go and buy a house right away, and we have to show bank statement right away, don't transfer money, okay? Keep the money, don't move money, okay?
I do have a question. I don't know if I can or should I ask now or should I ask later, but I think it's related to this.
Go ahead.
So what if a young person, he has an amount of money, and then he wanna buy it, but the source of the money is come from many sources, and do the lender, they will ask that person where's the money come from, even if his money, and stay there for a long time
In cash.
in the checking or saving.
Oh, checking and saving, that's fine. If you have the money in the checking account or saving account, that's fine. Lender love to see money in the checking and saving account. If you have a saving account, right, and in there you have 200,000 in there for a long time, that's good.
That's good.
That's awesome. If you're saving it, as long as the money in the account, and lender don't see deposit it, it's okay.
Oh,
Okay? Only cash. Cash. If you just deposit
Thank
cash
you.
money into your account, then they look into it. Even somebody have deposit 10,000 cash, still they cannot use that money. Normally that money is frozen. 10,000 cash, just stay there and you can touch it until after you buy a loan. You can use it, but during the time it froze there. And you have to explain. So no cash deposit. So no cash deposit, no money transferring from anybody. And during the okay, one more thing. During the process of doing mortgage, do not ask your client, do not move money around, even their bank account. For example, some clients have 5 different bank accounts, right? And if they keep moving their money from one account to another, that creates so many questions, and our loan department have to work really hard to answer all that question. Not only that, we have to talk to the borrower, providing proof money go from place to place. Even that, we have one right now, right? The client have money, and he keep moving money. And when we ask for proof showing account going to account, he say, why are you asking these questions? This is my money, I move anywhere I want. But lender don't see it that way, say, I wanna know where the money come from. And that's why there are so many conditions, when so many conditions take a longer time to close transaction. So in your first time when you meet your client, you have to remember to talk about money. Do not move money around your accounts, and do not transfer money from somebody else to your account. Do not deposit any check into your account. Do not deposit any cash into your account. You make sure you cover it, and not once, but maybe two, 3 times, because people forget. At the end of the section, I always say this: please call me anytime you're about to deposit something or about to transfer money. I want to talk to you about it before you do anything. And when you ask them to call you before they transfer money, they do. They say, oh, I have a check I just get from somebody, should I deposit it now? Normally, no. Okay?
Well,
No.
if they pay, I mean, if they work for it, like if they're like a
It's-
freelancer,
If it comes from work, that's fine.
that's okay.
Not from friends,
Okay.
relatives, from someone. Okay?
What I'm sorry.
Go ahead. I like questions.
How about like what if people like they're buying the house like cash in the home, like
Cash?
ca-
Oh,
completely.
cash? When you don't borrow a loan from,
No.
that's easy.
That's
As
it?
long as you have, but the money have to go from account to account. You cannot bring, not just like a movie, you can just bring the whole suitcase of money to the escort and say, here the money, right? Not like movie, okay? If you say, okay, my client purchased this home $1 million cash, okay, that's fine. As long as you can wire money from his account to title company. I don't know how he's gonna do it, but the money have to go from bank account to title company.
From Dubai.
The deposit, no matter. They can deposit, I don't care, because there's no lender. Only lender asking for the paper trail, where the money comes from, the history of the money. But title, they don't look into that. They just make sure the money go from your account to their account. That's it. So if somebody buying cash, their bank account maybe deposit all kind of cash in there and deposit all kind of checks in there, nobody cares. But that's cash transaction when no lender involved. Okay? Good question though, very good question. Okay, now, no, not done yet. We go to the last one, down payment assistance program. We will talk about these 2 programs this Saturday at 11 a.m. right here. If you have a buyer who interested, you invite them here, or you go to your social media inviting people, calling out the first-time home buyer, by the way. Say, you know what, I have a 30% down payment assistance for people who buy home in Santa Clara County. And this program is for first-time home buyer only. And this 30% down payment is from the county of Santa Clara. They let your client borrow for the down payment. So that means, but they require 3% down payment from the borrower and 2% closing costs from the borrower. So the borrower have to come up with 5% on their own. They only need 5% and they have 30% from the county, so their down payment total gonna be 33%. So the loan gonna be only 67% of LTV, right? So that's really good program. And by the way, there is 0 interest on the 30% down payment assistance, and they can keep it as long as 30 years. And they can refinance when the rate drop, right? When the rate drop, they can refinance it, but not cashing out. The moment they cash out or they sell the home, they have to pay back the 30% down payment assistance and some profit, but we're gonna talk about it next week, right? And then third, we also have another program with 20% down payment assistance from state. And this one, my favorite, because this is much easier to get. The 20% down payment from California, the borrower don't need to come up with any down payment as long as they have the closing costs. So they don't need to come up with 3% down payment. And This is for the entire state of California. But both programs, we need the borrower to qualify as first-time home buyer. What first-time home buyer means to all of us is they didn't own any home in the last 3 years. In the last 3 years. That means if somebody bought a home 10 years ago and sold it 5 years ago, so the last 5 years, that person doesn't own any home, that person qualify for first-time home buyer. They qualify for this. So in the past, just last year, we have the 10% down payment from state, and we closed so many of those. It's really easy. We help our client from A to Z. All they need to do is just come here, we help them. It's really easy. I like the 20% down payment from state because it's much easier, it's faster. It's just like this. They come here, we pre-approve them, we find them a home, and then we close the loan. But the 30% down payment is really lengthy. Here, what the 30% down payment? It's a long process. You will have to go online, fill out the form for your clients, right? 2 weeks later, if they get a yes, they will refer your client to the first lender of their choice. They will give a list of first lender. And then we're gonna help our client to pick one lender to work with. Now we work with the first lender to get approval for the first mortgage, 67% LTV, that means the loan amount. At that point, we haven't get approval for the second mortgage, the 30% yet. We just get an okay to go see the first lender, okay? And then after we get approval from the first lender will send us the approval letter. Oh, before you go to the first lender, you have to do, your client, the buyer, have to attend an 8 hours class. Okay, 8 hours, 8 hours. So 8, you're like, the time we submit the application for them to the day they can go to the class. 2 weeks later, and then they submit the loan to the first lender. They get the approval, I don't know how long, maybe 1 or 2 weeks. They get the approval from the second lender, maybe, for example, 1 week the fastest. They get, so that 3 weeks already. When they get the approval from the first lender, now they're gonna have a chance to meet the loan agent of the second loan, the 30%. 30-minute meeting. After they meet the agent, 30-minute meeting, they might have to give the agent everything that the agent need, and then that they entering the approval process. That means they haven't get any approval after 3 weeks. And I'm not sure they can get the appointment with the loan agent a week later or a day later or a month later. We don't know because so many people are applying for it. So for example, a week later, that means 4 weeks, they just get an appointment. And we don't know how long they're gonna get the approval for the second mortgage, that the 30%. And maybe, hopefully, they get the approval 2 weeks later, so 6 weeks total. So after 6 weeks, this is my time, that's not their time, I'm just guessing. So after 6 weeks, they get approval. So now they get approval for first and second. Now you can take them out and see home. Okay, but for the second program, the 20% down payment, the moment you give the package to our mortgage team, if you give them a complete package, the next day you get a pre-approval, you can go show home. Which one you like better?
The second one. So the second one, the mortgage insurance, you
They no mortgage insurance.
don't need it, right?
They
Because
no-
it's already 20%.
Yeah, no mortgage insurance in both cases.
Okay, in both cases.
Okay, yes.
So, I have a question. Like for the title, like the first time owner, what if the person is the first time, like, does it count if they refinance? Like how it's gonna count? Like the year, like 2 years, 5 years, they didn't own any house. Like what if they do refinance?
If you don't own a home, how can you refinance? You have to own a home to refinance.
No, like
I know, like you, like you said, like 5 years they don't have any house, right? Or 2 house.
That means they are first time home buyer. Okay, so first time home buyer mean you buying your home the first time. Right. This program is for people who buy home the first time. But it's they are easier, they say, but if you don't have a home, the last 3 years, you still consider first time home buyer. That means you currently own no home at all.
But if they don't buy a house, but they like their wife or husband, they add on the
That means
house.
they are not, they, okay, oh, okay.
And then we refinance.
For the
or
first
something.
program, right, if one of them, husband and wife, own a home, that means they are not first time home buyer. The first program, they are not first time home buyer.
But at the time that buying the house, only the husband or
Doesn't
wife.
matter. Husband and wife own a home together, they're not first time home buyer. Because remember, this program is for people who buy home to live in it. If you already have a house to live in with your husband and he own it, you own a home basically, and you're not first time home buyer. I think both programs work the same way. You know, if your husband own a home, by the way, we are living in California, and California is a community state. That means if your husband own a home, meaning you own a home. You are, one of you own a home, even you not on title, even you not on the loan, you still not qualify for first time home buyer because you guys already have a home to live in. Period.
But what if your husband like got a home before he get married to you?
Still,
Yeah.
even though he own a home, he own a home, and she live in it with him. They
She-
have a
she-
home to live in already.
At that time,
They doesn't matter. They
Okay.
live in it.
She explained it already. Like even if the wife doesn't buy the house, and but they when they put the name together, or when they have like the husband own the house first, and then the wife, then they married the wife, and then later on they refinance. So the wife have to be on the house because that's the law.
it's not have to
right?
be on the
No.
house. I mean,
It
like
doesn't need to be on the title,
On
the
the title.
wife, but by law. That's
See.
why when you guys, if a husband and wife divorce, doesn't matter who owns the thing, they still have to split everything 50-50. That's why we call our state a community state. Okay? So, by the way, the first program, the 30% down payment is really fun. For example, I'm gonna give you an example. If a couple living together with parents, okay, so there's 4 people in the home, right? And the parents, when the couple say, I'm gonna apply for this 30% down payment to buy our first home, okay? The moment they apply, they have to fill out who living in the home right now and who will be living in the next home right now. And they say, my parents. Then they have to submit the parents' income and the parent bank statement. Basically, they look at income of the whole entire house. Even though only the couple is buying a property, even though only the couple is really the one who want to buy. But as long as everybody living in that house, they have to show pay stub and bank statement. Not only that, because if they buying a home, that means they renting right now, right? You know what happened? They have to provide the rent agreement showing all 4 names on it. Because why we have to talk about all this? Because the first program, the 30% down payment, they have the cap on the income. A household of 4 people, the income can go up to 202,000. If you said you have a 4 people living in a home, then your income can go up to 202,000. If a couple make 200,000 already a year, and they put their parents in there because they think, oh, my parents not on the loan, they're not gonna buy a home, only me and my wife gonna be on the loan, but we have 4 people, so we qualify for 202,000 because they wanna put 4 people in the household to qualify for the income. But the moment, if they show the parent have income from retired income or whatever income, and that income of course over 2,000, right, a year, they're not qualified. But the second program, awesome. They don't care. Okay, as for example, a couple, husband and wife, right? They know these people, two people are gonna live in the home, but only one person gonna be on the loan application, on the purchase contract. They only look at income of one person. So which one you like better? The second one.
Where do we get more information on that second one? Just Google it?
Yeah, but we're gonna talk about
Oh,
it
okay.
this Saturday
Oh, this-
too. So
okay.
make sure you come. Today I just give you something,
Gotcha.
but Saturday will be more. Okay? Anybody in Zoom any questions?
I have a
The
question.
Zoom people are so quiet today.
I got a question
Okay,
for
go
that
ahead.
second one. So so when it's like wife and husband, of course it's community, like community, they're together. But what if, let's say it's like I wanna buy a house and then I need like a co-signer because I can't qualify on my own. Does a co-signer also have to be a first time home buyer, or can it just be?
In, I think, let me see. I think both have to be, first time home buyer. But I will check, okay? I'll check. Because right now, so many programs, I kind of messed up a little bit. Because there is one program from UWM, they allow the other person, doesn't need to be first time home buyer.
That's what I feel like.
Yeah,
everybody's
but I
saying.
think that, because that's not government loan.
Yeah,
But for government loan, they're more strict.
yeah.
But I believe they have to be both first time home buyer.
Mhm.
Go ahead, no question, we go next one. Okay, this is an interesting topic to talk about, avoid down payment scams. So, anyone on Zoom wanna read? No one? Okay, we're gonna read here. Alex, can you read me the first one?
Down payment wire fraud is the fastest growing form of real estate cybercrime in the United States. And even large corporations are not exempt from falling prey.
Yeah. Jose, can you read the second?
The crime exploded in fiscal year 2017, according to the Chicago Tribune. In fiscal year 2016, the FBI counted $19 million in wire transfer fraud affecting home buyers.
Okay, Kyle, read the last one.
That summer in 2017 was 969 million, just shy of 1 billion.
Okay, so that's just the number in 2017, so, let me share with you some story about down payment scam. It's happened to me a long time ago, I think in 2013. We bought a home and a week later, we received an email, luckily it came after, from title saying that we have to wire the down payment. And I asked my husband, wait a minute, we closed the transaction already. So that is scam, but it come late. So it didn't hurt us. But a lot of people, what happened is, do you wanna share your story?
Which one? Oh,
Which one?
Alex have a very good story to share.
I don't know what year that was. I think it was. I think it was 2017 or 16. My buyers are cash buyer, and we already gone through all the paperwork and all that stuff, and we're about to close. And they received an email. I didn't.
So Alex didn't.
I didn't receive the email. So my buyer received the email, and they're requesting, okay, we're closing we're about to close, and we need your money in. And the email, when they shared the email to me, it came from a title company, but the typing, the logo, and all that stuff are not exactly the same. But the title company is prominent, and they said, yeah, okay, well, we'll send it in. They're trying to get hold of me, but I wasn't available at that time. If I caught that call, then I can tell them, hey, you know what, that's not the right title company. So after going back and forth, calling that, emailing responding to that email, they sent the full down payment. And when I came to the office, I have a voicemail to call them back, Okay, hey, Alex, I've been trying to call you. Really, I didn't get the message. We already sent the down payment, and they received it. It got through. And I told them, hey, you know what, that's not the right title company. Go ahead and go to your bank and stop the wire because, the bank has that hold period.
Yeah.
I told them, go ahead and go there right away. So they did, and they went and say, that's a fraud, and I need my money back. What happened there is that they didn't get their money back right away. Pretty much
Invest.
it took a while. Um, Apparently, I believe the bank, they were able to recover it back. One big lesson here is that, of course, I lost the buyer. Okay, so they never come back to me. But after so many days of following up with them, the communication of pretty much break down already. So they're putting the blame on everybody, including me. So there was a case after that. They send the company pretty much there was a case. So the company pretty much helped me out communicating with the other entity, and we hire our own lawyers and stuff like that because they're trying to recover from us, from the company, from me, especially me because it was my email. After so many months, that particular case died. They never follow up with us anymore. So most likely they were able to recover it through that bank that they used.
So the bank
And-
paid for it, but the bank didn't get the money back.
Yeah.
They lost the
So
money.
most likely the bank pay
So
off.
what happened is, because Alex used, normally, in the past, Alex used his personal email, Yahoo, right?
It was a Gmail.
Gmail.
It was a Gmail.
So when you work in the real estate transaction, you use the company emails. That's the safest email because we have a secure system. If you use your personal email, that happened because they hack your personal email so easy. Nowadays, a kid can hack your email, right? So this is the real case scenario in our office. Okay? And it's happened so many places. So somebody hack into your personal email and knowing you are in a transaction with your client, it's easy. They read your email, they know who your client. And they kind of know when it's about to close. And I think you never close a transaction either. If you lose the transaction, you lose the client, right?
You lost the client and the transaction.
You lose everything. So make sure you use the company email to email everything related to the transaction. And this happened everywhere. Next. Okay. So this is how to avoid that, okay? How to avoid that. Dylan, can you read this for me, the first one?
If you receive an email or text about a down payment, call the realtor first to confirm that they sent the message.
Okay, awesome. So you tell your client, this is you talking to your client. Tell them, nowadays so many things fraud. I want to tell you this now in advance. Before you go wire your money, the down payment, you need to contact me. Doesn't matter if somebody gonna rush you, gonna hurry you, you don't wire money until you talk to me. Okay? And normally I talk to my client like this. I said, okay, call them. I'm gonna text you the wire instruction. And you receive it in 1 minute. And that is my wire instruction. If you receive anything else, not from me, from this text message, it's not mine. Even you get it from my email or from title company, from anyone, doesn't matter. But this is the wire instruction I sent to you, and this is the real one. And I text them the wire instruction, say, bring this to your client, your bank, and get the wire the money. Or when they come here to sign the document, I pull out the wire instruction, I give it to them, say, this is the wire instruction that you want to use. Do not look at any email or anything else beside this. This is the one you want to wire money in. I do that all the time. I give my client my wire instruction at signing. That's the safest way. If you don't see them, call them and text that message within 30 seconds and make sure they receive it and tell them, use that one, don't use anything else. Because you don't want them to lose money and you don't want to lose the client, you don't want to lose the transaction. Just one little tip, you save the whole deal. Okay, save everyone. Carl, read me the second one.
Also verify the banking details and ensure all the data is correct.
Okay, so actually that is our job. When we get a wire instruction, we can call our title company or escrow company to go over all the information on the wire instruction to make sure it's correct. That's it, but that's our job. Okay. Alex, can you read me the last one?
Don't click on links or download attachments you receive in unsolicited email or text.
Thank you. So if somebody, for example, you tell your client, okay, I already sent you the wire instruction, and if you receive an email, another email from me or from anyone telling you to wire the money, don't click on any link or any download, or do not download anything, because that might be a scam, okay? So this is our job, and you guys take this seriously, and you guys remember this. Make it a habit when you talk to your client. Okay? Okay, more. You wanna read the first one?
The first one is never ever wire money without double check with wire instruction.
That's the repeat. So we're gonna double the wire instruction. Ing, read the second one.
Even if you are given a short deadline to wire the fund, take the time to call your realtor.
So even you tell your client, even somebody on the phone or on email tell you to go wire right away, do not do that. Talk to me first, okay? So do not call the number in the email, call your realtor, right? Tell your client, never respond to that email if you feel like this is not right. Just call me, okay? Do not respond to the email. Okay, I do it twice. Okay, do not respond to the email too. Okay, cool. So this is important, guys. Remember this one. Pay close attention to emails. So when they read email, they have to find out who really is sending the email to them. Because sometimes it looks so similar, the email address, but it's not the same. If someone involved in your transaction contact you from multiple email addresses, this is a red flag. So you can tell that to your client. If somebody keeps sending you different email, that means it's something not right. Okay? So this is our job, to educate our client, to protect them. Okay, everyone?
Really scary.
It is scary, but if you being precautious and you tell your client up front and you do the right thing, do the right thing. As an agent, we have to do the right thing. We have to do our job. Make sure we educate our client everything from the first meeting. Two things: money, down payment, and fraud. Two things. So this training becomes so important. I never done this before because I never think about down payment is that important. But now when I really sit down and think about it, anyway, I spent many hours working on this one. I'm done with this at 1 a.m. last night. Yeah, because I feel like, oh my God, this is so much to talk about and so interesting. So I spent time. So now we can talk about down payment option to our client, right? I'm gonna go fast on this one because we run out of time. If somebody buying home the first time and buying home to live in it, and if they not qualify for any down payment assistance, we have a 3.5% down payment if they want to do FHA loan. And every county we have loan limits, different loan limits. This is the Santa Clara County, and for one unit, the maximum loan amount for FHA is $822,000. If somebody buying 2 units, maximum loan amount is $1,053,000, and for 3 units, it's $1,272,000, and 4 units, almost 1.6 million. Okay, so FHA loan for owner occupied only, but when they do FHA loan, they live in one unit, they can rent the other units to tenants, so they can make income at the same time living in the unit. And this is for FHA loan only. And I'm gonna go to the next one. This is government loan, FHA loan for first time home buyer. Let's do it. I think let's take a note. Everybody, while waiting for people taking note, I want to tell you this. Bring your client to this Saturday meeting. Go to social media, talk about the meeting, invite people, ask them to sign up with you. Give them your phone number so they can sign up with you. So when they sign up with you, that's your client. You take care of them because the whole purpose of the meeting is to call out the first time home buyer. So you as an agent, you get hot leads without paying any money. The company doing this just to support you. The whole purpose of the meeting is to support you to get the first time home buyer. So if you don't take action, that's your loss. I want everybody go online or email or text whoever you know about this meeting this Saturday. Hey, you wanna go? You have to sign up with me. Last Friday, I go. I only have 50 spots, so you have to sign up right away. Otherwise, you don't get in, and then I got signed up right away. So give them some special, okay? Okay, now next, down payment option. We have conventional loan for first-time home buyer, 3% down payment minimum. Okay, for somebody who not qualified for the 20% or 30% down payment assistance, they can do this. So same thing, we have the loan amount different for first 1 unit, 2 unit, 3, 4 unit. But if you look for the 1 unit, they can do 3% down payment. But for 2 unit, they have to do 20% down payment. And for 3 unit and 4 unit, they have to do 25% down payment. Different, guys. The loan department, you have to remember this. If somebody buying conventional loan and they're first-time home buyer, you have to be able to tell them what is the minimum down payment. This is conforming loan, okay? But awesome. If somebody buying with 1 million, 20%, oh my God, this is awesome. There are duplex right now less than $1 million. Yeah, and they do 20% down. They can rent another one. Awesome. Okay, now we have more conventional high balance loan limits. It's higher loan amount for 1 unit, but minimum down payment is 10% for the 1 unit, and then 2 to 4 unit they have to have 25%. Look at the 4 unit. How much is the loan amount? $2 million, everyone. $2 million. That means it's a huge loan and not even considered at jumbo. So that's the 4 unit, okay? Any questions?
So for 1 unit, I have 10% down payment and they
Only
have
10%.
they pay for PMI.
They pay PMI. Yes. Good job. Good question. So for 1 unit, for the conforming high balance, they have to have 10% down payment. But for conforming loan, they only need 3% down payment. Okay? But 2 to 4 unit, 25% down payment. Okay. Okay, just a review. So everybody, we want to be everyone on the same page. At PacificWide, we offer mobile home loan. Mobile home loan, because there are a lot of people right now, they're not qualified to buy a home, they buy mobile home. And do you know mobile home loan or mobile home purchase transaction is a good thing to do. At PacificWide, we do both. So if you have someone that, hey, I want to buy mobile home, can you do a loan? Yes, here at PacificWide, we do mobile home loan too. We do HELOC loan. That means somebody who need money, but they don't want to refinance cash out because their interest rate right now is very low, 3% or 2.5%. We can get them a HELOC line right now. That's really awesome. Right now, every bank closed, not allow client to do HELOC. We here still allow them to do HELOCs. Okay, very good loan. We do jumbo, conventional. We do FHA, VA. We do no doc loan. No doc meaning we don't need any document. All we care is your bank statement showing your down payment, and we don't even care the deposit in your down payment, in your bank statement. So this is for no docs, okay? No doc, P&L, BOE. P&L means profit and loss. So for people who own business and they file tax, normally they don't make any money. We don't need the tax return. We only need the P&L, and the P&L they can create it, or the CPA can help them to create it. And this it's really easy loan program for people who own business and tax return doesn't qualify them for any mortgage. We can help them to do P&L, or for people who earn W-2 but they deduct income, like people who, there's a lot of W-2 that they deduct income. So also when they deduct income in their tax, they don't qualify for any mortgage. We do VOE for them, and we do loan for I-team. I-team mean people who doesn't have social security number, but they work in the U.S. and they file tax. I-team mean individual tax identification number. Okay, and we also do 5 to 8 unit loan apartment loan. Oh, we also do construction loan. I should put construction loan, but the maximum loan amount for construction loan is only $1 million. But if somebody need, you know, $1 million to build their own home, we can do it too. So we offer all these programs, guy. I want you to know so that when your client asks, you know that we do it. And if you have a client and they want to come talk to me, just let me know. We set up an appointment. We can go over with them what we can do for them, and they can ask any question. And when you set up a meeting like that, you learn. You learn how I talk to your client. You learn the program as well. Okay? So I think that's it for today. And oh, remember we have the meeting, 30% down payment assistant and 20% down payment assistant this Saturday at 11 a.m. Invite your families, your friends, your client, whoever that first time home buyer to the meeting. Okay? And I hope to see you all this Saturday with your clients. Okay? With your clients. Any question before we close for the meeting? No question? Anybody on Zoom have a question? No question? Okay, we have no question. We can stop right here. Thank you everybody so much for joining.